High costs are pushing value-oriented consumers to trade down and find better bargains. As Five Below, the retailer, is in a position to win the value shopper. The company's increased its store count. It's focusing on new on-trend merchandise. Roth MKM senior analyst David Bellinger says the company is well-positioned to take advantage of this. He's leaving the company a buy in his latest research. David, thanks for being here. So, Five Below, you say in your note, has made a rapid shift to value-oriented merchandise. I mean, I always think of Five Below as a value-oriented player. What has changed?
Yeah, good morning. Thanks for having me on. So we upgraded Five as we believe this shift from the consumer standpoint to value-oriented merchandise has taken shape quicker than we originally anticipated. I would say we have a broader spending backdrop that's a little more quiet at the moment. Inflation is still above 6%. The consumer is stressed to some degree, but they're still out there. They're still spending. And Five, they've got the low price points that are really working well in this kind of environment, whether that's in toys, tech, beauty, gaming. You've talked about Squishmallows on your show in the past and some of these other hot trends. So they've got momentum coming off a pretty strong holiday season. And I think that should continue to build throughout 2023.
Who do you believe, David, that this company is gaining market share from?
Yeah, it's coming from, I believe, all across the board, really, right? So you might have some trade down from your typical retailers, maybe like a Target and Walmart, right, where those toys could be a little higher priced, those value-oriented items a little higher priced than what Five is offering. But they are making that shift to scale up and have this Five Beyond concept, which I think is really interesting and still has a great value flavor to it. I've been in a lot of stores lately. They've got items priced upwards of $25. They've got that value flavor, like I mentioned, and I think that really has the potential to supercharge the revenue base for Five. I think it'll add a few percentage points of sales growth alone this year. And if you couple all that together with the freight, the fuel costs coming in, I think that makes for a nice earnings setup over the next several quarters. And we still see upside in the shares even at these levels.
It's interesting with some of the other companies that you cover as well. You're neutral right now on Lowe's and Home Depot, and that Beyond concept, it certainly kind of takes on more when you think about the number of categorical players that are also trying to implement that. I think of a Walmart and a Target that have very much of this Beyond concept that could infringe on a lot of these other very niche players historically, especially if there are low replenishment rates. So where does that continue to rattle some of the consumer discretionary shift in that spending over towards the players that already have their groceries and already have the things that they need to get on a day in, day out basis?
Yeah, it's a good point. What Five really stands out is they've got some of the best merchandising that I've seen in my career covering the consumer space, whether it's some of these hot anime trends that they're leaning into now. You've also got things like collectibles, Pokemon cards. They even had Kendall and Kylie Jenner exclusive products. So to me, that's a nice stepping stone for Five and just showing what kind of product they can get themselves, these exclusives in the store. And it's clearly a traffic driver. So you've got, teens and tweens coming in. Five's really one of the last few, if not the only, kids retailer left in the United States broadly. I think they're taking share, and it's become sort of this viral TikTok kind of business that they pick off these trends really early and they stock up. It's the perfect example of this was the fidget spinners a few years back, really put Five Below on the map, and they've really kept that core customer, and they've made Five Below the destination now, as opposed to having a customer come who's shopping at Target or a Starbucks or a Chipotle, and they'll stop off at Five Below and check it out. Now Five has become the destination. I think they're driving a lot more of their own traffic organically.
David, if this company stands to do well in a still high inflation environment where consumers are very value focused, what does that mean for two names that you also cover in a Home Depot and Lowe's that sell those bigger ticket items really at the same time as a housing market that is continuing to slow?
Yeah, so that's a concern I have. And I've been neutral on Home Depot and Lowe's from the start here. And if you look at some of these numbers they've put up, they've just been incredible. And for example, Home Depot, they've added well over $40 billion of incremental sales since 2019. And I think that's bound to slow, and that's somewhat healthy, right? To have somewhat of a give back here. And It's not anything bad about the company. It's more of the sector, I think, is slowing a bit. And if you've got home prices really starting to roll over and decelerate, in my mind, that's the biggest proponent of home improvement sales, is what home prices are doing. And if you do have some limited confidence on the part of the consumer to take on one of these big ticket projects like a kitchen renovation that could cost $50,000, $80,000, if that steps back, I think that'll bleed across other categories of what Home Depot and Lowe sell, and you might have a bit of a softer 2023 here. And I think with the stocks trading at these levels, I think they're pretty fairly valued right here.
David, thanks a lot. Appreciate your time this morning. David Bellinger of Roth MKM. Thanks.
Thanks for having me.